One thing you say to people is that you are a lazy investor. Why do you say that?
I say that I'm a lazy investor because I try to do less rather than more. I find that if I make fewer, better decisions, I have better portfolio results.
When you're looking at your portfolio, what type of themes are you looking at for the next 3, 5, 10 years?
So companies like Caterpillar, Schneider in energy management, Carrier in HVAC, I really believe that we're in sort of a golden age of discovery in healthcare and that we're going to cure some things that have previously been incurable.
Is there a company like that you've held for decades?
Well, one of my favorite stocks in healthcare is...
Today I'm joined by Jody Jonsson, who is my friend, a very senior member of our management committee, vice chair of Capital Group, an equity portfolio manager based in LA. And she's been at Capital Group 34 years. Jody, welcome.
Thanks, Mike. Great to be here.
So you know I'm the president of the Jody fan club, and you are an overachiever in every way, starting from being at the top of your class and being a great mentor and investor and senior leader. And in your spare time, you also found time to be a pilot. So I have a picture of you that's going to come up. We have viewers and listeners. For our viewers, there is Jody, and can you describe it for folks?
What is happening in this picture?
So how'd you become a pilot? And tell us a little about the picture, if you don't mind starting us off that way.
So I became a pilot in 2013. I took a 3-month sabbatical during the summer of 2013 when I turned 50. And thought it would be fun to take up something new. And since I had a sabbatical to do it on, I had time. And so
of course,
I became a pilot. And I still had no idea what I would do with it. But long story short, over the last 11 years, I've gotten a number of different ratings. And I'm now flying a twin-engine plane. But in this particular picture, with the GoPro strapped to my head, I am flying an aerobatic plane with one of the world's great aerobatic pilots. And I had an opportunity to fly with someone who's truly a greatest of all time in his plane, not mine. And it's making me a better pilot, but mostly it's an opportunity to do something with a tremendous person who is truly expert at it. And if you have the chance to do that, why wouldn't you?
So I appreciate that you did that, but why did you need to fly upside down? So the second picture we have is you flying upside down.
Yes.
Please describe this, because this is terrifying for all of us who do not love flying and fly all the time. Flying upside down is another level.
Yes, it is. So most of the time I'm flying right side up.
Good.
I just want to be clear. Okay. This is a special aerobatic airplane. I'm in the front. My friend is in the back, the greatest of all time. And he's basically talking me through the maneuvers of doing loops and rolls and hammerheads and things like that. So it actually does make you a better pilot. It makes you more precise, more sensitive to when the aircraft is at the edges of its performance envelope. And basically, it's also just a blast.
It's pretty cool. And you promise that when you're on your own, you're just going to fly the right way?
Yeah, I never fly upside down by myself, I promise you.
And this Angel Flight West, tell us what it is and how you got involved.
Angel Flight is a group of volunteer pilots who transport people who need medical care. It's not like an ambulance, but it's generally, say, cancer patients who are going from more remote areas to major medical centers and need transportation. Maybe it's not covered under their insurance or whatever. And so pilots love any excuse to fly, and being able to fly when you're helping someone else is that much more fun. And so when I can do it, I just sign up for available missions and I take people from one place to another.
That's great.
And really what I love about it is I'm inspired by the patients. It's very humbling to hear their stories and makes you grateful for good health. But it's really a treat to be able to help people in this way.
That's great. So let's get into Capital Group. In 2002, you moved your family to Geneva, help continue to build our presence outside the United States. Can you discuss that a little bit? Who asked you to do it? Why did you do it? Did you have fun doing it? Tell us about Geneva.
Well, I got obsessed by the idea that we could build a business outside the U.S. offering our services to retail investors. And I was over in Europe on business, heard some of our associates talking about it, and I developed this crazy fascination with the idea. And when I came back to the States, I would ask people about it and say, why aren't we sending more people? Why aren't we doing more? And everyone would say to me, why don't you get involved? Right. So finally, I went to my higher-ups and said, would it be crazy for me to be involved in this? I'm willing to go. But nobody really asked me to. I just decided I'd like to, and I volunteered, and they said it wasn't crazy. And so off I went with my family to Geneva when my kids were very small.
How old were they at the
They
time?
were 6, 5, and 3.
Okay.
So it was an easy time to move them. And it was a wonderful experience, both personally and professionally. Professionally, because it was a tremendous opportunity to help something that was very nascent at the time, work with an incredible team, very international, people from all over the world, and really get to know all the other parts of our business, a lot of the operational and really nuts and bolts of running a fund company. I learned that. But then for my family, of course, living abroad, learning languages was just such a tremendous opportunity. We ended up spending 12 years in Europe.
So how many years in Geneva and how many years in London?
5 in Geneva, 7 in London.
So you've been in Geneva, London, San Francisco, LA.
Yes.
I'm going to ask you questions about those real quickly, but just to get a sense. If you could only live in one of those places, and this is personal, not to do with business, you had to pick one for 5 years, which one would you pick?
I think just as a city, London is incredible. It's such a global crossroads of absolutely everything, and it has amazing culture and food, and it's easy to get around. So that's probably my favorite city of all of those, but every one of those places I've lived has had wonderful aspects.
Best food?
There's a lot of great food in London.
Okay. Yeah, there wasn't 20 and 30 years ago,
but there is now.
But it's okay. So best culture?
I think Geneva was interesting because it was just so multinational and multicultural and multilingual, which was more so than any other place I've lived.
Final one, I promise. Best office snacks?
It was hard to beat the quality of the chocolate in the Geneva office.
I would imagine that. I would imagine that would be the case. All right, let's get involved in investing in your day job. One thing you say to people is that you are a lazy investor, and I know you exceptionally well, and you are not lazy in anything, but why do you say that?
I say that I'm a lazy investor because I try to do less rather than more. I find that if I make fewer, better decisions, I have better portfolio results. So I've noticed over time that every year the turnover in my portfolio goes down. It's now down into single digits.
Wow.
So that means I'm holding stocks on average maybe 12 years. And so I'm making fewer decisions. And so when I put a new stock into the portfolio, it has a high hurdle, and it's got to be better than something that's already in there. And then I just try to hold it for a long time. And I've gotten less concerned about valuation and less concerned about being tactical and really trying to own winners that I think can run for many, many years. And that's helped my results.
So you're rivaling Jim Lovelace with your turnover rate. Jim and Rob Lovelace both have sort of high single-digit type turnover. Early in your career, was it 20 and 30% and you moved it down to single digits?
Yes, I think so. So over time, you just learn what makes you a good investor and you play more to those strengths. I think in the early years, you're trying to do a little bit of everything and see what works. I've now done it long enough to know that I will never be very successful in certain types of industries. So I just don't spend much time on those. And I really try to play where I think I'm in my strike zone.
And how do you do that with something like our new perspective strategy? So it's a global strategy. What's the process for you? The globe is a big place.
Mm-hmm.
So how do you find ideas in such a big universe of opportunities and maybe talk about that process?
Well, New Perspective invests in companies that benefit from changing global trade patterns, which is a pretty broad definition. Right. But in practice, that means multinational companies that generally have at least a quarter of their business outside the home country and that truly act as multinationals.
Regardless of domicile of their headquarters, quote unquote.
Exactly.
Got it.
That tends to produce a better than average fishing pond in terms of the quality of the companies. And I like to refer to them as global champions. These are companies that are battle tested. They have lived through recessions, depressions, inflation, deflation, regulatory change, trade wars. They know how to be globally mobile and flexible. They're the best equipped to deal with changing circumstances. Whether they're getting better or getting worse, it almost doesn't matter. These companies know how to deal with it. And so I find that definition of the type of company we're looking for gives us a tremendous pool to fish in. And those companies have tended to be higher than average quality.
I remember when I was interviewing Rob Lovelace in our first podcast, he talked about owning Nestle for, I don't remember, maybe 20 or 30 years. Is there a company like that you've held for decades? in your portfolio?
I have actually held Nestle the entire, almost the 20 years. I think because there's such a legend about this, it's being handed down from one manager to the next. But there are a number where I've, probably Taiwan Semi, Novo Nordisk,
so you
certain
hold Novo,
financials.
you hold Novo before the GLP.
Yes, I held it a long time ago.
Got it.
Then things got a little rough about 10 years ago, but then I came back into it a few years ago in a much bigger way. And so I tried to get to know these companies over many, many years. And, I think that's really the way to succeed long-term is to let the compounding work for you. And I've tried to not be overly tactical, trimming and adding too much, but just if it's working, let it continue to work.
Back to New Perspective, again, as a strategy, I think we've had 23, 24 different portfolio managers in New Perspective over the 50 years of its existence. How do those transitions work? How do you move people in and out over 50 years and still have the pattern of investment results look very much the same?
It's been such a privilege to know all of those managers. I feel very fortunate that
you knew
everyone who's ever been in the strategy I have worked with at some point. So it's a very planned, phased approach. We bring managers in, they try out, and it's sort of like they have training wheels. And we make sure that they can ride before we take the training wheels off and publicly disclose them if we think they're going to be a good fit for the strategy longer term. And then we build up their assets, generally either from inflows or from managers who may be retiring or scaling back. And so this is always going on. We're always building a bench, and we're always thinking about the succession of people who may be retiring in the next several years and trying to keep the assets moving toward strong hands and newer people who are coming up the ranks.
So I imagine as an analyst, because our analysts manage money, it's part of the capital system, that they're not just stock and bond raters, they manage money. You're getting a sense of how they execute in different type of market environments, so that when you're contemplating them for New Perspective, you have a really good sense for their profile, how they have upside capture and downside capture, and how they diversify their holdings. I'm sure there's a group that looks at all of that. Can you talk about how that happens? And I think it's the investment coordinating group within your own investment unit, but maybe talk about how that happens.
So we do have analysts managing money at Capital. It's core to the Capital system. And so we do have a lot of history on people by the time they start to become portfolio managers. As you said, we know how they do in different environments. But when someone becomes a diversified manager, they're now investing in areas that weren't core to what they were covering as analysts. So that's new. And it takes people a while to find their footing and figure out what types of companies they do best with. We have tremendous support from our quantitative research folks to help us analyze portfolio characteristics and styles and biases and that sort of thing. And that's all part of the process that we use in putting manager teams together. We try to take all this information and say, how can we make a team that's complementary to each other? So everyone isn't going the same way at the same time. We have some people who are a bit more growthy and some who are a bit more contrarian. And if we assemble the team right, it should lower the volatility, and the fund should be able to do well in almost any environment.
So you're putting together the puzzle in lots of ways. Thematically, when you're looking at your portfolio today, what's in there? We'll get to individual stocks, but what type of themes are you looking at for the next 3, 5, 10 years?
I used to be a member of our industrial cluster within my unit, and so I have a soft spot for strong industrial companies. And I think we're in a kind of a sweet spot right now for industrials because they're helping this technology transition, both in terms of energy and decarbonization, but also data centers and AI and all that stuff that we're building, that requires industrials to actually build it. So companies like Caterpillar, for example, smart buildings, Schneider in energy management, Carrier in HVAC. There's so much industrial stuff that people thought of sort of traditional cyclicals that's actually now becoming much more software-oriented, service-oriented, has a technology component, and I think gets rated more like a technology company. So I'm very excited about that. I also have a lot in the aerospace sector as a pilot. I love airplanes, and I actually know a reasonable amount about aviation and airplanes. And that's attracted me to some of the suppliers because you realize how special those positions are. Once you're certified by the FAA, it's very hard to disrupt you. It's a very long process of getting that certification. And so companies that have that and that can make, highly engineered parts, for example, that are not easily replaced. That's one theme. I also have a lot in healthcare. I really believe that we're in sort of a golden age of discovery in healthcare and that we're going to cure some things that have previously been incurable. And I'm very excited about not only the companies that are doing that, but a lot of the companies that supply them and form the ecosystem around drug discovery.
Yeah, those are great themes. On the aerospace one, I heard some stat that only 1.5 billion of the 8 billion inhabitants have been on a plane. So in terms of secular long-term themes, and the barrier to entry is very high. So I imagine, did your investing in aerospace change after you became a pilot, or?
Well, I'm more knowledgeable about it.
Right.
I understand better what it takes to be certified. I understand more about how engines work, et cetera, and the complexities of the global aviation system, having been a participant in it now.
Yeah, I bet some of those leaders at those companies, when you come in and ask your questions now, have to dig a little bit deeper in their own knowledge. What about maybe just one or two more individual stocks that you could see holding in your portfolio for the next 5-10 years?
Well, one of my favorite stocks in healthcare is Vertex. And the reason I like Vertex is they're in some therapeutic areas that not that many other companies are in, that are huge areas of unmet need, like type 1 diabetes and pain management. They've got a solution to pain that doesn't involve opioids. And if you think about the tremendous impact of the opioid crisis, if you have a non-opioid solution, that could be just a gigantic potential market for them. So I'm very interested in the way they go about research and the areas of therapeutic need that they're trying to address. Another company that I covered as an analyst for many years is Chubb Corporation, insurance company. People think of insurance as a very pedestrian business, but Chubb is a tremendous compounder as a company. They just continue to grow book value. They're very profitable. They're very well run. They are essentially, one of the rare, truly global insurance companies. And it's a wonderful stock to have in a portfolio. And every now and then people worry about it when the hurricane comes along. But it's a tremendously diversified global company that, again, I've known for 30 years because I covered it as an analyst.
Long-term holding. We're going to shift a little bit here. I do want to get to the office treasure hunt. And in your office, you have a photo of yourself and you're speaking somewhere. And I always feel if this is in your office and it's on our screen for those who are watching, but for those who are listening, I'm going to ask you to describe where you're speaking and what you're speaking about, because it must be important to you. I'll hand it to you.
Yes. So this is a picture of me in the pulpit of the Washington National Cathedral. I went to National Cathedral School for Girls, and so I spent a lot of time in this cathedral growing up, but I had never actually spoken from the pulpit. And people like Martin Luther King have spoken from this pulpit,
Wow.
So it was a big deal. I was invited to speak to my high school last fall. And what was special about this trip was not only getting to make the speech, but one of the other people participating in the service was the only remaining teacher at the school who was there when I was there. She was my favorite teacher, my chemistry and physics teacher in high school. She retired this year at age 80,
Wow.
but she was a tremendous mentor to me. And that we were participants in this service together made it that much more special for me coming back after so many years.
That's great. Thank you for sharing that. I do want to get into some of the lessons you've learned over time. I find this to be one of the most interesting parts of any of these podcasts because it shows our investment professionals are human, shows we make mistakes, that we learn from our mistakes. Whether it's a theme or an individual stock, where was there a lesson learned, whatever year it was, that you remember today because it helped inform the investor you are?
Well, one of my worst mistakes ever was a company called Sendent in 1998 that turned out to have fraud, and the stock went down 50% the first day and then proceeded to go down another 75%. There were lots of lessons learned about the mistakes to avoid from an investment standpoint, but one of the great things about it was how encouraging everyone at Capital was to me.
So you were the primary analyst?
I was the analyst. I was jointly covering it with someone else. And the day that happened, I must have gotten 45 voicemails from people saying, don't worry, it happens to everyone. Now you're in the club. You're not going to get fired. Just keep doing your job. And the encouragement that I got on what was probably then my worst career day ever was amazing. And that probably wouldn't have happened at a lot of other companies.
And did it change the way in which you looked at management, looked at the kinds of questions you asked management in those meetings?
Absolutely. It showed me that managements don't know as much about their companies as we often think they do. And I had a situation several years later with another company that was accused of fraud. And you realize as much as managements try to know what's going on in their company, they don't always. And so we have to be humble about what we can expect them to know and what we can reasonably know about a company. We dig and analyze and do everything we can, but there are limits to how much we can know. And I think we always have to be humble about that.
That's an interesting perspective because some of the folks who I've chatted with on the podcast are super passionate about getting to know companies. They even describe it as their investment edge, is sort of how to interview a company and try to weed through the information to see what's really going on. But you think of that as one of the pieces of the puzzle, but not the driving force of your investment theme.
Since I was an insurance analyst for 15 years, and I was a real geek, I really dug into the numbers and all that. But almost all the surprises were to the downside in terms of companies realizing, oh, we're under-reserved for this hurricane or whatever, right?
Right.
There were hardly ever really good surprises. No, and the managements weren't trying to mislead you. They just didn't know. The world's an uncertain place. And so I had to be very humble about what I could expect them to know and not assume that they were always giving me the best information. I had to do as much of my own checking as I could.
That makes sense.
And I think there was a lesson in that about getting too close to companies as well. I mean, we do have great close relationships with managements, and that's a tremendous strength, but you also have to be objective. And I think that's one thing that's easier to do as a portfolio manager than as an analyst, because you're one step removed.
Yeah, exactly.
You're not the primary person in the relationship. And so it's a little bit easier to be objective, to challenge the analyst a bit, to say, hey, maybe you're losing your objectivity a bit. Not that portfolio managers are always objective either, but I think in some ways the job's a little easier when you're not so close to them.
So that must have been interesting as you shifted from being an analyst to a diversified portfolio manager. Your relationship with some of those CEOs obviously changed because you weren't the ones in the meeting asking all of the questions, and you could take a step back, be a little less close, and have a different perspective on it.
Exactly.
Your investment edge, and maybe talk about that. What do you think that you do that others might not? And again, it doesn't. We've heard lots of things about the benefit of time, understanding moats. Everyone has a different little edge that they have that makes a big difference in their investment results. What's your edge?
I think my edge is how I build a portfolio. I focus a lot on portfolio construction, and I think about correlations among my holdings. I think about what sorts of factors or themes are represented. And I think I'm good at building a portfolio that's quite durable, that will generally do well almost regardless of the economic environment, that tends to be lower in volatility, and that I generally don't blow up. I will never be the best portfolio, but I am generally never the worst. And I think I'm above average as enough of the time that when you compound that over 10 years or so, it leads to a very good result.
No, that makes sense to me. And you tend to hold low cash in your portfolios, right? What is 5% a lot of cash or a little cash in your portfolio?
I'm in low single digits at the moment. Now, I would say I don't use cash as much as I used to. I've used it in size twice, in the GFC and then again in 2022. I've realized I'm not very good at timing my use of cash. I try to have a little bit available so I can take advantage of opportunities, but I'm not trying to make a statement with it.
So in today's market, heavily concentrated, I've never seen more large institutions looking at active management for diversification from a very concentrated benchmark. What parallels do you see now in the markets to 20 years ago? I mean, right around the time of the dot-com bubble being burst, we had a similar type concentration in the market. Is that a fair parallel? Is it not? What do you see that's the same or different from now to the early 2000s?
I think The concentration is starting to change. The Mag 7 are not acting as a group. Just even this year, they're acting very differently from each other. And the market's broadening. There are lots of other sectors that are doing very well this year. It's not just technology. To me, the similarities to the late 90s, early 2000s are, yes, you have some behemoth companies that are highly valued. But I think the fluffy parts that we had in 99, 2000 were more similar to like 2000 to 2001. And I think the correction in 2022 took care of a lot of that. So I don't see as many examples of sort of crazy valuation with no support. The largest, most highly valued companies today have a lot of cash flow and strong balance sheets and terrific earnings growth. The market's been led mostly by earnings growth, which was something we didn't have as much of in the previous.
So it doesn't feel like a bubble to you where in 1999, 2000, there was the feeling of a bubble.
Yeah.
It doesn't have that feeling.
I think there was some bubbly feeling a couple years ago, but again, a lot of that fluff got washed out in 2022.
In your role at Capital Group, one of the other things you do, amongst lots of things, is on the government and the regulatory side. Since you've been more involved with that, has it changed the way you've invested in your portfolio?
Having an inside look at the regulatory process does make me think a lot more about the impact of that on companies, both from a cost standpoint and a management distraction standpoint. So obviously we've seen that with some of the antitrust actions that are being taken against technology companies, but also just the difference between good regulation and bad regulation is enormous, and it has lasting effects for years, if not decades. And so the opportunity to help influence that in a positive direction is also something I've seen. We often think of regulation and legislation as just sort of handed to us. But I think in Capital's case, we've been very constructive about how we engage with people who are making rules and try to make them better.
And that's a global comment, right? I mean, obviously, in the U.S., where we have a large percentage market share, we're heavily involved, but we're also involved outside the U.S. in the regulatory front. Can you talk a little bit about that? Because I know you spent time traveling to help that effort.
I've been in Brussels and Hong Kong and Singapore and other places. Yes, I mean, it's becoming more and more important to be globally joined up on a regulatory approach, because often what starts in one part of the world migrates to other parts of the world. And you basically have to comply with all this anyway. And you know, to the extent that all these regulators talk to each other, some of this starts to bleed into other areas. And so we've had to be much more globally joined up in how we keep each other informed.
You travel, as we just talked about, you travel a lot domestically, internationally. Let's go inside Capital Group. What do you hear from our colleagues when you're in San Antonio, Indianapolis, Hampton Roads, Irvine? What do you hear from our colleagues about their thoughts on Capital Group, their thoughts on the industry? What are the kinds of things they're interested in or asking you about?
Well, I was just in our San Antonio office last week. It was very exciting. The spirit in our offices is tremendous, actually. I always get really jazzed up when I go. I come away I feel like the associates get me revved up too. I think a lot of them are just asking questions about our long-term strategy. We've put out a long-term strategic plan, and they really want to see what their role in it is. And that's what I try to do when I go around to these different offices, is help people see themselves in the plan. You know, what is my role to take Capital to its 100th anniversary in 2031?
So asking an individual, I think I heard you said to a few folks, either coming out of the elevator or somewhere in the hallways, can you tell me specifically your impact to our long-term strategic plan? Not what you read in our long-term strategic plan, not what we put out in the town hall in London in June, but you as an individual, how are you going to contribute to it? What are the kinds of responses you're getting to that? Because that's a very specific question to someone.
Well, someone asked me, what would success look like? And I said, if I come back in a year and everybody here can tell me what their role is in the plan. So I'm giving them a little time to come up with their answer. I think one of the most exciting things, though, was I had brand new associates coming up to me, telling me how excited they were to be here. And particularly if they've worked elsewhere, they realize that Capital's different and a very special place. But I think the newer folks really appreciated that we had a plan, that we were laying out a strategy, and that we were now starting to operationalize it. And I think they appreciated the clarity with which we were viewing the future and our role in it.
Yeah, and for those listening and watching, we turn 100 our centennials in 2031, and our long-term strategic plan has that time frame in mind. It's really exciting. I do want to talk, you're a big reader. You read a lot of books. One that you've read recently is Deep Work by Cal Newport. Can you share a little bit? Because I've heard you in the hallways mention the book and your write-up on it, but why is it important to you?
I actually read it about 5 years ago, but I think there's no book that I return to more often than this one. And I wrote up a little book report and sent it around to all my investment group colleagues because I thought it was so important that they probably wouldn't have time to read the book, but they could read my little book report.
Modern day Cliff Notes.
The key theme of the book is that the ability to do deep work, meaning focused, concentrated, undistracted thought, is increasingly rare at a time when it's becoming increasingly valuable in the type of economy that we are in. And the book is all about training your mind, essentially, to reduce distraction, reduce the impact of social media and texting and all this stuff that's distracting us all the time, and literally changing the way our brains work and the way we think, and get yourself back to the ability to work in this state of flow where you're creative, you're focused, and you're really doing your absolute best work. And he has so many very practical suggestions for how to do that I literally read my book report about every month or two, and I keep circulating it. I talk about this book, and I circulate my little book report to people I talk to about it.
We might want to share that broadly at Capital Group and externally, because there's so many distractions and there's so much noise. That focus to be able to be really good at something because you have the time to think in a differentiated way is really, really hard to find. I want to get the book report because I get heavily distracted on those kinds of things. Jody, if you weren't an investor at Capital Group and you weren't a pilot, so you can't pick pilot, what else would you be doing? I'm glad you're here. I'm very glad you're here, but what else would you be doing?
I still have this desire to be a meteorologist. So when I was in high school, I was really fascinated by the study of weather, and it's actually a useful skill to have as a pilot because you spend a lot of time looking at weather forecasts. And even before I was a pilot, I thought it'd be cool to be one of those people who flies into the center of hurricanes and things like that. So,
which is not something I've ever said.
No, I do think the study of weather is becoming ever more relevant, but the tools we have now in terms of AI and, machine learning and all this stuff, the tools, the apps, the ways you can analyze weather are just so powerful now compared to when I was a kid growing up being interested in it. I think it's really fascinating.
All right. I have two asks of you. One is
do not fly
upside down and don't fly into a hurricane. Those are going to be two things that I
promise,
ask.
no hurricane
Please.
flying.
Okay, please. Let's finish up, and I'm going to share with you what I like to refer to as the world's largest mug.
I love large mugs.
This is our gratitude mug. And we love to finish by sharing a moment that we're grateful for. I'll start to give you a second to think about it. But during these holiday times, I'm grateful for family. Spending time with family, it's hard when your kids become young adults and get older. You don't get to see them as much. Like your kids, my kids as well, are all in their mid-20s. So having some time where we can spend together around the holidays is something I'm grateful for. What are you grateful for?
Well, like you, I'm incredibly grateful for my family. But to come back to the theme of the picture that we looked at, that picture has made me incredibly grateful for the mentors I've had. My high school teacher who pointed me in the right direction with the sciences, and then a professor of mine in business school who pointed me toward capital. When I think about the mentors I've had at key pivotal points in my life, utterly life-changing, right? The ability of a mentor to make a difference in the life of someone they're advising with just the slightest suggestion. It's such a powerful thing. I'm so grateful for the people who did that for me. And it's something I really try to do for others, particularly now at this stage of my career. I want to pay it forward, give it back, and try to be a mentor as much as I can. And it's just so amazingly powerful, and I'm so thankful I had people like that in my life.
Well, I will tell you from working closely with you, you are paying it forward. You're a mentor to so many people at Capital Group. You're such a strong leader here. We're fortunate that you arrived at the shore 34 years ago, and you're having such an impact on our associates and our clients. So thank you for everything you do at Capital Group, Jody.
Thank you, Mike.
We appreciate it. Thanks for joining us, and please subscribe to Capital Ideas on YouTube or wherever you get your podcasts. Have a great day.